Major U.S. averages were stalling Friday after a big run-up in stocks. Now, Kenny, the VIX has barely moved. What is that signaling to you?
It signals complacency, right? And that's exactly what we've seen in the market for the last week and a half. We've been in this very tight trading range. We can't break out to the upside, but nor do we break down either, right? We're stuck in this 15-25 range. Not a lot of volume, kind of signaling complacency. People don't need to make a decision. They're waiting for a big directional driver. What's that going to be? Is it going to be Washington and the sequestration? Is it going to be something out of Europe? Certainly, is it going to be something out of Asia? It could be any one of those major economies that's going to create it. But until something happens, the market's going to be stuck.
And next week, President Obama is set to meet the Japanese Prime Minister. We've also got central bank minutes coming out and more headlines out of the G20 meeting. Could the currency war concern also be a central theme for next week?
Well, I think it will. It's going to be a theme. I don't think it's going to be a central theme. I think the G20 is going to work very hard at trying to negate that kind of story about there being a currency war. Mario Draghi's out saying it's fruitless to talk about it. Even though we all may suspect or see that appears to be what's happening, they're going to come out and they're going to tell the story about how all this stimulus around the world from different central banks is really to promote growth. It's not designed to create a currency war, even though that may be the byproduct. That's not what they're trying to do. And so they'll get away from kind of using that terminology, and they'll really talk about the broader macro pictures and what they see. I think out of the G20 today and tomorrow, what you're going to get is, they're going to talk about what's happening in the global economy and their forecast. They may or may not revise what 2013 looks like. We saw that yesterday. JP Morgan revised U.S. GDP for 2013 down to 1.9% from 2.4 because they fully expect that sequestration is going to kick in and that the economy is going to get hurt, at least in the short term here, right? And so it'll be interesting to see what the G20 says.
And just wondering what other key items will you be looking at next weekend that investors should be watching out for to base key decisions on?
Well, listen, I think the daily macro reports everyone's going to pay attention to, but I think those are going to take a back seat to the much bigger issue, and that bigger issue, I hate to say it again, is sequestration, right, is what's going to happen. We saw yesterday the Senate proposed a plan which calls for tax increases, closing some tax loopholes, and some spending cuts, but it totals $110 billion. We still need $1 trillion worth of cuts that don't seem to be forthcoming, and that's going to be, kind of the chatter next week. It's the last week of February. March 1st is right there around the corner, and so the market's going to start to pay very close attention. Up until now, it's been giving a free pass, thinking that maybe the legislators are going to come together and do something, but the closer we get with no deal, the more nervous the market is going to become.
Thanks, Kenny. This is Andrea Say reporting for The Street.